Let's get some reaction to the jobs number. As we mentioned some of the metrics here, Jim, lowest annual wage growth in a while.
Right.
And as we said, participation is encouraging.
Major focus is exactly what you just said. And I want to say something that it's really bugging me. There's so many people who are looking for a rate cut in this weird world that we're in finance. You look at what we've got here with these numbers, and if you're Jay Powell, you're saying, let's just play it out. But why do we have to start cutting? We have good numbers. Let's be sure. Let's have 6 month worth numbers like this. And David, it's only on Wall Street that they look at something, they have to make a decision. No one wants to say, hey, you know what? There's no trade here.
Right.
They have to trade.
I guess they have to.
They have to. They're jonesing for trading.
I guess they are. I was on the phone with somebody who typically would, and I said, you know what? Don't do it. Just stay on the phone with me. And they did. They stayed on the phone with me.
They probably made $1 billion.
And by the way, they ended up not losing because I bet you they would have gone short. You saw what happened to the futures right after. And now they've come more or less almost all the way back.
David, with a series of great calls.
So I did save somebody, I think. This is an old friend of mine, and I know, I do know that they tend to do that.
Well, okay, so I
was like, don't do it. Don't get off the phone.
Well, I think that the bias toward action by them is very unrealistic for if I'm Jay Powell. Jay Powell says, look, I can keep rates up. We got a 3.7% unemployment rate. Why shouldn't I wait till it gets to like 4.5 if we really have to start cutting? Because right now we're just beating inflation over the head. Let's keep beating it.
Yeah, there are people starting to slice and dice, take away the UAW effect, take away SAG-AFTRA, take away government, and take away healthcare. And some of these non-cyclical areas, Jim, you're looking at $26K for the month.
Manufacturing is a little bit stronger. We're spending $1 trillion in reshoring. We could create 28,000 jobs. A lot of people are confused by that healthcare number because we just don't see it in the system when you look company to company. But this is a very strong report, and I think that those who keep looking for revision that's down, you get a revision that goes the wrong way. But I think good is good, is what I'm saying. I think that when you read some of these strategy notes we're starting to get, their biggest fear is a recession. They should wake up and smell the coffee. They really should.
Meanwhile, we got gasoline futures 2-year low. Oil's on pace for 7 weeks down. Haven't done that in several years. Meaning, does the tone of the meeting change next week?
I think that the meeting can be, look, we're going to watch and wait. If we see weakness, we'll take action. But
we get CPI and PPI.
Yes, right before. Right? Yeah. Right before.
So I think that's going to be more.
That's my point on oil. I mean, the headline's going to be.
Look, it is important, but don't they have a statement? You think they changed the statement maybe on CPI? I don't know. Look, we've been dealing with companies all week, like take Toll Brothers. I mean, the homes are $1 million. That's not what the Federal Reserve wants.
Yeah, but there aren't that many of them.
Right, but I'm saying that the price of a house is up 40%. There was a really great moment in the Dollar General call. By the way, extraordinary call because they have the old CEOs back, Bezos. It cost them 30% more to make a store than it did 3 years ago. Well, that just makes the prices go up at this stuff. Well, or they take out an Oreo. You know how we do that? You know how when you buy a package, you say, wait a second. I think there's some Mike and Ike's missing.
Well, now you're getting to David's Malamars.
Thank you. Carl, you've been listening all these years.
He knows if there's one fewer Malamar.
They cut back from 10 on the side to 9. That was years ago, and then they made them smaller. But I think Mondelez has stopped the shrinkage for a little while.
You do? I think Mondelez...
They took the Tates that were like this, and the Tates are now like this.
I think I'm worried about shrinkage there. Not stealing. But the Toblerone, I bought it in Italy. I think it was I don't think it was 1.5 yards. I think it was like 1.5 yards. But it was in metrics. See, they fooled me because of that metric system.
It's better for all of us. It's better for all of us. We wanted to go on GLP-1s. We'll just eat fewer cookies.
The Toblerone, that's a weapon. It is. It's a weapon. I mean, that thing is just too much. By the way, the shrinkage in Dollar General, frightening. 100 basis points.
All of which is to say what in terms of the economy? Things, the lower end is getting hit a bit.
Yes,
we know that.
A bit.
But joblessness remains.
Well, as long as you have a job, you're going to spend.
Remains low.
I heard someone talk about the credit card debt is bad and card debt is bad. If you have a job, you're going to pay for that car because you got to get your job.
I know. Also, when you look at delinquencies, the fact is that they're really not even back to
20.
They're right. They look worse given the surpluses everybody had a year ago or 2 years ago as a result of the government's money, but they're still historically not bad at all.
Right. No, we have to ask for a crazy period where you were getting checks. It was like, hey, there's another check I got for the president.
Well, that was to prevent economic scarring, which every month we get an indication worked.
Right. I agree.
Right.